MWB. This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Congress is poised to pass a bill to keep AM radio in cars. But time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Register now at dav5k.boston.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org. Fandetti.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you, and 2 days after the world ended, stocks continue to rally as, well, it's, the stock market. It goes up sometimes, and it goes down sometimes, and look, none of us know exactly where things are going to go from here, but things got a little bit overly dramatic on Monday in terms of how people were talking about what was going on for a 3% drop in the S&P 500, which statistically, Mark, I believe happens on average about 1.5% of trading days. So it's not something that happens all the time, but there's 252 trading days in the year, and so it's normally something that you see 2 to 4 times in a given year.
Normally, yeah.
And as such, again, I understand that we can all be a little bit nervous about this, but this is a feature of markets, this up and down movement. It's not something that's unexpected, and ultimately it's something where we're now starting to see the aftermath of that, investors reassessing and saying, okay, what's the economy look like? What's the data look like? And how do we move forward in a constructive manner?
The real story seems to be a little bit arcane. There are times when market sell-offs are driven by fundamental news. The economy turns down.
Sure.
There's an outside
But you can make a case was Friday. Friday we got bad economic data. And the market sold off.
But it took more than that, it seems. As we talked about yesterday, the proximate or immediate cause seemed to be the so-called unwinding of this practice that traders engage in, and they've been doing it from time immemorial, of borrowing where money is cheap to buy something that pays you more. The fancy name for this is the so-called carry trade. And the phrase...
Another name for it is banking.
Yeah, I guess. Some people attribute the phrase carry trade to the fact that you're carrying the higher yield asset like you own it. But carry is used in other parts of finance too, where that
it's confusing.
Origin doesn't fit. So, but roll with this. We'll call it the carry trade. You borrow in a cheap currency, in this case, the yen. And this happens every few decades. The yen, because their economy has mostly been, I won't say depressed, because their standard of living is very high, but rates have been low and growth has been low since the 1990s. And because of that, it's cheap to borrow there. You can borrow there and you could buy anything. You could buy the dollar. You could buy an asset denominated in dollars. You could buy semiconductor.
You could buy shrimp
stocks. You could. I hadn't thought of that. You could.
It's an appreciating asset. Within a couple days, they generally go bad, but you could buy shrimp.
You'd have been better off buying shrimp than yen over the past couple. Actually, the yen is appreciated. This is the problem. This can catch you wrong-footed. If the currency you're borrowing in goes up by a lot, you're suddenly required to, say, post more collateral. So you got to sell something. And you're probably going to sell that which is appreciated. So in this case, there was a... Go ahead, Chuck.
Yeah, and the other piece there is a lot of times once those losses start, if you are working in a hedge fund, a lot of time your risk manager comes and says, hey, you got to unwind more of this because we can't have larger losses.
Or the HAL 9000 computer you have on your desk is making those trades for you once share. And we're oversimplifying a bit here, but this algorithmic or computer-driven trading just propagates this cascade. So the proximate cause was probably technical, not fundamental, although there were some fundamental concerns. So you had a confluence of sort of negative events, a perfect storm, if you like, of negative events, resulting in these waves of selling starting in Asia, propagating here to the U.S. The yen is weakening, and what do you know? The waves of selling have stopped for now.
Correct. And other things that we've seen overnight, the Bank of Japan, the Deputy Governor Shinichi Uchida, he announced that...
God bless you. Oh, I'm sorry.
He announced that they were basically, look, we're not going to surprise markets anymore, because what they did last week, markets were expecting maybe a 0.05% rate hike. Again, not a 0.5%, 0.05, 5/100ths of a point from the Bank of Japan. They got a 15 basis point hike instead. And so the Japanese central bank has come out and said, I'll give their exact quote, "Therefore, the bank will not raise its policy interest rate when financial and capital markets are unstable."
Yeah, because you destabilized it, dummy. Them, excuse me.
So, on one hand, I say, yes, you did. On the other, hey, aren't you just enabling hedge funds to go and do that? Like, the tail's wagging the dog here. If the Bank of Japan says, hey, we've got an inflation problem and we feel we need to raise rates by 1/1500ths of a percent in order to try to deal with it. If your hedge fund strategy is so badly constructed that little move that you might be 20 or 30 or 40x levered to destabilizes you and you have to sell everything, that's
I wouldn't call it badly constructed, Chuck. You might be the premise might be unrealistic, but they were led to expect a rate increase that was 1/3 of what actually happened. And the margins on many of these trades are razor thin. It's hard for us as long-term investors to appreciate it.
This is why I don't love this extra, talked about guidance from central banks, is we get so locked into, well, it has to be this, so this is what what's wrong with the central bank being a little bit unpredictable? It's, again, back in the 70s and 80s, like you've talked about this a lot. They didn't even tell you that they were changing interest rates.
No, you had to look in the newspaper and infer
it's just all of a sudden,
the
the rates went up. They must have raised interest rates.
And even then, it was always debatable.
So it's something where, we're so over-communicated. This communication policy on all of this leads everyone, not everyone, but, hedge funds, institutional investors to say, oh, like there's no risk. And then when they go out and do something different just because they think that they need to, oh, how could this have happened? Well, manage your risk better.
And, by citing the, again, immediate or proximate cause, attributing it to technical factors, there was this backdrop of economic anxiety. I don't want to minimize the concerns of the softening economy.
Yeah, definitely.
The environment has to be ripe for this kind of thing, too. I'm not minimizing the sell-off. I'm just conveying what the consensus explanation is. I don't even profess to understand it. We're just trying to. Every market sell-off, as Mike Armstrong and I were talking about yesterday, is kind of a murder mystery. So's every recession. Economists are still arguing about the crash of '29 and the Great Depression. They don't agree. Macroeconomists, people that specialize in that field, don't agree on what started it or what ended it.
To be fair, it's only been 95 years.
Yeah, maybe we need more data.
We need more time.
The point is, these things, as you like to say, are complex.
Yes.
And when you have something like the economy that's influenced by a lot of forces, positive and negative, every second of every day, it's impossible to get to first causes.
And the other thing you have to remember,
virtually impossible.
Markets are also reflexive. And what I mean by that is how they behave influences the behavior of other people. It's this whole idea of what the crowd does, other people tend to follow. If you go to a sporting event and you're sitting there, and let's say that you're playing on your phone, as people are prone to do at sporting events these days. You look at the people sitting courtside and you're like, you paid $20,000 for that seat, and you're texting someone about, hey, what are you doing after the game? Like, what are we doing here? But you're doing that, and all of a sudden you hear a cheer go up. What do? You cheer because the crowd's cheering, not because you actually know anything about what happened, but because, hey, like something good must have happened. It's an exaggerated example, but in general, we see this phenomenon in all types of things. You ever go to a convention and you say, gee, there's a lot of people around that booth. I'm going to go see what's going on. What attracted you there? It wasn't the booth. It was the crowd. Likewise, when markets go up or down, you see, the market selling off. How many people on Monday either thought about or actually executed something, not because that they knew anything different, but just because they said, oh, gee, the market's going down. Things must be bad. I got to get out of
this.
this.
This is a rational, by the way, evolutionarily engineered response.
It's
Everybody's
completely
running.
right.
You run because you don't want to be the guy that gets caught by the tiger.
Exactly. Like I'm
or
not.
Whatever.
I'm not poo-pooing this is bad.
I'm not suggesting you were.
This is the impulse that all of us have.
Normal.
You wake up and you see red on the board of the markets, and you're like, should I be selling? It's the first thing that you think of. It's the first thing I think of. I might answer that 3 seconds later. No, you dummy. Don't do anything before you know what's going on. But yes, it's like this is evolution of humans. We are wired to understand what crowds around us are doing.
Yes, the smart response.
And that's why
survival-wise.
It's why both manias and panics happen in markets. It's not because the economy over the course of a few weeks or a few months deteriorates to the point where every company is going to go out of business. It's just we get nervous because we see everyone else doing this.
Sometimes there are fundamental underpinnings, but it's pretty rare, though.
And rarely,
at least in the modern
again,
era.
when it comes, I'm talking
2008 was like that.
I'm talking manias and panics. Like you rarely see. Again, 2008 was the exception that proves the rule. 2008, we were weeks away from financial Armageddon.
But
maybe
1929 is a counterexample. It wasn't obvious. There was nothing fundamentally wrong with the economy at that time. Things were looking a little over. I say that like I was there witnessing it first person, but people who've recounted it say things looked overextended, but there was no immediate catalyst, fundamental
87,
catalyst.
Black Monday.
That's probably a better example.
There was no, yes, stocks were a little bit overvalued, but they fell 20% in a day. Why? People saw everyone else selling, and they decided to sell too.
Why that day? Why that magnitude? Nobody's come up with a good answer.
I have a great story from a buddy of mine who was trading back in the pits during that time, and everything's like frozen for I forget exactly what the circuit breakers were at that point. They didn't have like the advanced ones that we do now, but orders were being canceled left and right. And his boss comes up to him and he goes, "When things reopen, I want you to place orders on every single thing that you can." And he goes, "What are you talking about?" I mean, he's a market maker. Like the whole premise of market making is don't lose money. Like find ways to make little spreads here and there. His manager goes to him. He goes, "Either you're going to buy the bottom tick on everything, or none of this is going to matter." He's like, "Oh, okay, got it. That's where we are right now." Because, again, like when you get to that point, it's kind of,
But if you did that in 1929, you would have lost your job and been out of work until 1952. So it's worked in the modern era.
His point was it wouldn't matter anyways because everyone lost their job in 29.
Yeah, okay.
Like that was kind of where he was going. It's like, hey, if you buy this, it might work. If you don't, we're all screwed anyways then, Let's take a quick break here. When we come back, we'll talk a little bit about the Somm rule because Claudia Somm wrote a piece for Bloomberg, and we'll discuss what she says about her very own recession rule.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trust to consider, but irrevocable trusts can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secured, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. Head to visitusvi.com and book your trip today. No passports needed, and there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com.
Let's talk a little bit about the SOM rule, Mark, because everyone, we're getting to the point now where, you know how you're like, hey, if your cabbie's giving you stock tips, the market is, near its top.
Mm-hmm.
Now the cabbie's talking about the SOM rule.
Well, we keep talking about it.
But I've heard it mentioned from people who are not economic adjacent even. I'm hearing it from people who are not followers of markets or the economy.
We talked about this months ago here on the show.
We did. You heard it here, not necessarily first, but before you heard it from your cabbie. And it's not to disparage cabbies and their stock trading. Sometimes they're good, sometimes they're bad. But in general, once you start hearing, once something is exposed to a large group of people and everyone knows about it, it's kind of hard to use it as anything meaningful in markets because everyone knows about it. The alpha's gone. So Claudia Sahm, who the rule is named for, published a piece in Bloomberg, and the headline is, "My recession rule was meant to be broken." What does she say?
She recognizes, because she's a PhD trained economist who worked at the Fed, and she's done intensive work in a field called econometrics, the study of variables and how they interact, behave, how to do forecasting, stuff like that. She knows the SOM rule is not a rule. It's, what did Powell call it? This thing. He also called it a statistical regularity. I was using the phrase empirical regularity yesterday because that's what you read in the textbooks. It's one of the first things you learn. You need to be able to distinguish between things that make sense in theory, like the yield curve inversion, makes sense in theory as a recession predictor. It makes sense that when short-term rates go up, it's probably because the Fed is tightening, and that's been followed typically, historically, by recession. So the yield curve inversion is an example of an empirical regularity, or said less abstractly, something that has always happened before something else historically.
An economic thing, as Jay Powell described it.
That's an okay. Well, I understand. You understand why he's got a subtle mind. He's not a stupid guy. I make light of his lack of formal economic training because he's in the premier economics job, which is just sort of weird. It'd be like me trying to coach football or something. It'd be a joke. But he recognized, he's subtle enough and he's nimble enough to recognize that it's not a rule, and Claudia knows this herself, obviously. It's this thing, as he said, that's always happened before some other thing. And sometimes things that precede other things cause them or have a common cause with those other things. Sometimes it's just coincidence. Sometimes it's neither. The point she's making here is that just because the unemployment rate has gone up by a certain percentage over a certain period of time before every recession, absent some theory, which there is none underpinning it, other than that, unemployment tends to go up during recessions. Absent some tighter causal, if you like, relationship, it's going to be broken, of course. And she's right.
And when we look at, I've said this before, if there's any business cycle that's going to break previously established relationships that worked, it's this one, because it already has. There's been so much where you've looked at it and been like, well, we didn't think that could happen, but it did. And this is both, kind of on the downside in 2020 and on the upside in, the last couple of years where we've seen, the economy recovery, albeit with, very high inflation. So I think when we look at this, I say this quite frequently, economics is not physics. I know that we like to think of it as...
Who thinks that it is, though? I'm not saying you do, but no economist would say that it is. It's a soft science. It's a social science.
But most people aren't economists. Well, and I think sometimes it's because it has numbers in it, it gets lumped in with hard sciences where it's not.
We do put things out to the second or third decimal place, and that gives it a false precision. Yep.
It's a lot closer to Shakespeare than it is Galileo.
I wouldn't put it that way, but point taken.
That's
it's a soft science. It's like political science. I can't think of any others.
I mean, really, economics, if we're talking, it's the study of human behavior.
Well, look, economics as a science came about after the Great Depression because we were trying to understand why there's all this unused capacity in the face of this great want. Foodstuffs piling up, factories idle, people starving side by side. What the heck is going on? But it followed the physics revolutions of the 1800s, where everything became mechanized and formulaic. It was only natural to try to apply the same mathematical tools to the study of how humans get the most out of scarce resources. So it paralleled physics and development. But we've known for a long time that there are too many unpredictable variables to make useful forecast the way you can, as you say, in physics.
So Claudia Sahm, who has the SOM rule named after her, which, again, it very clearly states, very simply, hey, if the 3-month average of unemployment rises 0.5% above its low for the last year, you're basically entering recession. That's what she has stated. She now effectively says, and again, this is not unexpected based on her background, as you noted, hey, this just because it's worked in the past doesn't mean it's always going to work in the future, and this could be a case where it might not work. So we have to see how things play out over the next few months before we can say anything conclusively.
Great advice.
Let's take a quick break here. When we return, it's time for Wall Street Watch, and then we're joined by Todd Lutsky from the law firm of Cushing & Dolan for Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Celebrate National Farmers Market Week, August 4th through August 10th. This is the perfect time to visit your local farmers market and indulge in the peak of summer's bounty. From juicy tomatoes and sweet corn to fresh berries and more, your favorite seasonal produce awaits. Support local farmers and enjoy the freshest ingredients. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Together, let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled A Day in the Life of a Retiree. Mike, one of the key focuses of this piece is about how to figure out how much income you actually need in retirement and where you start tapping assets from. How do you make those decisions?
Yeah, don't you hate the rules of thumb on this, right? Like, oh, I'm going to need 80% of what I had before. The answer is that there is no rule of thumb. There's no good one that you can use to figure out how much income you are going to need in retirement. Do you have a mortgage? What sort of travel are you planning to do? Yes, you won't be commuting as much. Maybe you and your spouse can go down to one car, but if all of a sudden your plan is to dramatically increase your travel budget, that changes everything.
And when you look at other things that can matter, it could be, where's your family located? Are you planning on moving somewhere else? Do you have grandkids that you want to spoil? These are all things that are going to play into that discussion of how much money you need to retire on.
Yeah, no doubt. And so it really does start right there with assessing your retirement ability. It's what type of income am I going to need in order to just be happy. It's not necessarily about maintaining lifestyle. It might be a different lifestyle once you're retired, but will I be content with it? And what sort of activities and lifestyle am I looking for once I am done with that 9 to 5, once I'm done putting in the hours for working and saving for my future?
Our guide this month is titled A Day in the Life of a Retiree. The way to request it is by calling 800-393-4001. Again, it's titled A Day in the Life of a Retiree, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in rally mode for a second straight session with more dip buying going on. Right now, the Dow is up by over 0.75% or 327 points. S&P 500 is up 1.25% or 65 points, and the Nasdaq is up over 1.5% or 250 points. Russell 2000 is up by over 0.75% as well. 10-year Treasury yield up by 4 basis points at 3.93%, and crude oil is up nearly 2% higher, trading at $74.54 a barrel. Disney reported second quarter results ahead of the opening bell, beating expectations due to strong performance in its streaming unit. Disney's entertainment unit, which includes its movie studios, posted an income of $254 million, up from a loss of $112 million a year ago, thanks to a strong box office performance from Inside Out 2. However, the company warned of softening demand at its U.S. theme parks, sending shares down by about 2%. Meanwhile, CVS down by 1% after the company beat second quarter earnings expectations. However, CVS cut its full-year profit outlook due to the impact of higher medical costs. Elsewhere, Airbnb posted weaker than expected revenue guidance for the third quarter, where the short-term rental company warned about signs of a demand slowdown in the U.S. and shorter booking lead times globally. That stock is sinking by 15%. Lyft down by 13% after the ride-hailing company issued disappointing third-quarter revenue guidance, and Reddit shares down by 5% after the social media company beat second quarter street forecasts on the top and bottom lines. Reddit also posted better than expected daily active user metrics. However, again, that stock down by 5%. I'm Tucker Sylvan. That's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
And we are now joined by Todd Lutsky from the law firm of Cushing & Dolan, here to answer your questions about your estate plan. Studio lines are open at 888-205-2263. That is the number to call to ask Todd your question about your estate plan live on air. 888-205-2263. Get calling now. We usually only have time for a few calls to get through. So, again, that number is 888-205-2263. One more time, it's 888-205-2263. Mr. Lutsky, how are you today?
I am never better. How are you?
Tough night last night.
What'd you do?
I had a dream that I was a muffler.
Yeah?
Woke up exhausted.
Yeah, no, that does happen.
Yeah.
Yeah,
just
it's horrible.
Brutal.
Yeah.
Brutal. Not good. Let's talk a little bit about trusts, which I know is kind of a horrible introduction for an estate planning attorney because that's kind of a broad topic.
Yeah.
I want to narrow that down.
Good.
Irrevocable trusts, the Medicaid protection kind.
Mm-hmm. Mm-hmm.
How do they actually work? What do they do?
Of course.
It's kind of like magnets. How do they work?
Yeah, of course. That, and I'm going to have to narrow that down further because, of course, I could spend probably an hour and a half, 2-hour seminar explaining how they work. But we're gonna pick it apart.
You got 2 minutes.
I know. We're gonna pick it apart. So I think what people need to understand is, as you said, Chuck, appropriately, Medicaid irrevocable trust. That in and of itself tells you that there's other kinds of irrevocable trusts that might strike more of a fear into people because they think rigid, inflexible, I can't change it, I can't do anything. And those trusts do exist. This isn't one of them. This Medicaid irrevocable trust, if I can emphasize anything about how it works, is how much control you, as the creator, the donor of the trust, will keep. And that's what I want to stress. So let's start off with that. Many, many people say, well, what can I do? What can I not do with these irrevocable trusts? What goes in them? What doesn't go in them? Well, let's start with a house. Most people put a house in. That's a big asset. That's one they want to protect from the nursing home. And if that's the only item you put in there, it's so easy because you set it and forget it. There's nothing to do. There's no income being generated. I'm not renting it. I'm not filing an income tax return. Great. What can I do with it? Well, you can live there, much like you do now. You get to pay all your real estate tax bills and your utility bills. Hooray. Much like you do now. If you ever did want to rent it, you could rent it. I'm not saying you will, but at least that option remains on the table, like now. And you could collect the rent, like now. But more importantly than all of that, everybody says, well, that's great. Nothing's changed, Todd. Except if we want to move. That happens. Get older, you want to move south, you want to maybe go up to New Hampshire, sell,
happens really frequently.
Yeah. These are things that people want to do. I'm not going to put in a trust if I can't do that. You can still do that. So it's wonderful that you can direct the trustee to sell the property. The money goes in. The money goes out, and a new piece of property comes in. I mean, this is literally like you selling it personally, except it's sold through the trust. And I think what's most important is even if you end up moving to, let's say, Florida, the trust can stay with you. Doesn't have to change. And most importantly, you haven't reset the 5-year waiting period when you do that. So it's not like, oh my gosh, I have to start over. I've had it in there for 8 years already. No, you don't. So just a little flavor, folks. Again, so many things you can do with the trust. That's just one that I wanted to get out there because people have houses, and it's one of the most important things to put in the trust.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. If you have a question that you'd like to ask Todd about your specific estate plan, we've got the studio line open at 888-205-2263. That number again is 888-205-2263. We are going to take a quick break here, but when we come back, it's going to be right to your questions with Todd. Still have a little bit more room on the phone, so if you do have a question, this is your opportunity. 888-205-2263. One last time, that phone number is 888-205-2263. Your calls right after this.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Last year, we introduced you to Marc Vaughter, CEO of Veterans Development Corporation. Marc is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud member of a military family, including my father, Victor, and my brother, Timmy. Serving my country was one of the greatest achievements of my life, and it's why I choose to give back to this special community. My father built Veterans Development Corporation, and I am honored to continue his legacy of working to help many disabled veterans and their families. It also gives me great pleasure to once again be the presenting sponsor of this year's DAV 5K Boston. I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retirement Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
Alrighty, let's get right to your calls with Todd Lutsky here. Let's go first to Bruce in New Hampshire. Bruce, what's your question for Todd?
Well, here's my question. My family, the three of us in the family, three siblings.
Mm-hmm.
We own a house down on Cape Cod.
Mm-hmm.
Each of the siblings has children.
Okay.
We need to figure out some sort of a trust or something to pass this down to the next generation.
Mm-hmm.
And the plan is that everybody wants to keep this in the family. It's been in the family. It's a summer house only.
Yeah.
So the way it is right now with no setup, if one of the three was to die,
mm-hmm.
God forbid, it would automatically go to the other two partners, not to their descendants, correct?
Well, let me ask you, this is a question for you. Have you looked at, that was what I was going to ask you, have you looked at the deed? Does the deed have, A, B, and C, the three names, joint tenants with right of survivorship? Or does it say A, B, and C own it as tenants in common? You really need to know that answer to that question before I can answer your question. So do you know that answer, or are you not sure?
If I'm not mistaken, which I could be, I think it's tenants in common.
Great. So if it says tenants in common, then the property will pass according to A, B, and C's own individual estate plan. It will not go to the survivor. But it's very important when siblings own things like this, 1/3 each, to understand how it's owned. Okay, so first and foremost, if it's tenants in common, you're better than joint tenancy. I don't know that I love that arrangement still, but it's better than joint tenancy because you're right. If it was joint tenancy, then it would go to the survivors when one dies and disinherit the person who died's family, spouse, children, etc. So you don't want that. Secondly, I wouldn't own it the way you're owning it. Now, it doesn't sound like you're renting it. It sounds like you don't have any liability concerns, but each of you really need to do your own estate plan, right? You want to, 1, make sure it avoids probate when one dies. 2, you want to make sure it goes to your side of the family. 3, if it's something you want to keep in the family, not knowing what the rest of your estate looks like, you might need an irrevocable trust for your third, and then everyone does their own planning. But if you don't, and any one of you gets sick and need nursing home care, you could lose the house, right? So if someone, A, B, or C, goes into the nursing home, well, the other two might be forced to buy out the house in order to prevent it from being taken by the nursing home. So perhaps irrevocable trust planning would be right for all of you. Don't know. Maybe you're self-insured. Maybe you have enough other assets to handle the nursing home. Then I would shift my attention to maybe more of a revocable type trust and worry about how to keep it in the bloodline. So get it to those grandchildren. Show how it gets there. Protect it from future divorces. And even maybe, if you want, have it set up to get to one more generation before you run into something called the rule against perpetuities. So you can probably keep this in trust for almost a third generation, but get the trusts done, get your planning done. So that's a great question. And folks, just like that, this is and for their situation, I mentioned irrevocable trust. Maybe they want to keep it in the family. Maybe they want to make sure it doesn't get taken by a nursing home so that it stays in the family. Then maybe their plan is to use an irrevocable Medicaid trust, which is the exact trust that's described in our guide this month. This is called Unlocking the Power of Medicaid Irrevocable Trusts. If you've never had one, but you've been afraid of the word irrevocable, and many people are, this guide is for you. It'll help you understand what you can and cannot do. It's done in a question and answer format. It tells you all the things that can be done while you're living and all the things that can't be done. You'll find the can't be done category very small, and I think you'll be pleasantly surprised with how much control you have over the assets that go in here. It explains how they operate. Get the guide, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Todd, we've got another caller for you. Let's go to Jerry in Randolph. Jerry, what's your question for Todd Lutsky?
I want to know if I could make a will without an attorney in Massachusetts.
Well, can you? I think you can. I think there are programs out there. I mean, I hesitate. I kind of say God forbid, but you absolutely can go online somewhere. I think there's softwares, there's programs that are available that allow you to make it. Hopefully you hit the right button. Hopefully you pick the right options, and hopefully you follow the rules that make a will a will. In that regard, it would be, it's got to be signed. It's got to have a testamentary language in there regarding an affidavit. So it's got to have witnesses. It's got to have a notary. It's got to have the language that says, I hereby revoke all prior wills, among other things. So there's requirements. Can you do it on your own? Perhaps. Give it a shot. And lastly, I think you probably need more than a will, because a will in general is a won't in my eyes. It won't it won't avoid probate. It won't protect assets from a nursing home. It won't reduce estate taxes. I don't know if any of those things are things that you want to do. If you do want to do those things, then you're going to need way more than a will. So hope that answers your question.
Todd, I've got one more queued up for you. We've got Annie in Topsfield. Annie, what's your question for Todd?
If you have an IRA
Mm-hmm.
and your husband is one of the beneficiaries,
yes,
I heard that that's okay.
Yes.
He will have no problem. But if you add your daughter to it, she might have a problem.
Well, when you say a problem, let me explain what that. First of all, it's 100% if you die goes to your husband, correct?
Yeah, but what if he dies?
Well, you always add a contingent. So first you have a primary to the husband, second a contingent to the kids or whatever kid or child you want it to go to. So it's a primary and a secondary. I thought you were saying, what if I want to leave half to my husband and half to my child? I don't know that it matters. You can do that as well. But generally it's a primary beneficiary, which you are absolutely right. From an income tax perspective, it should be the spouse. They get the best income tax treatment from an IRA. And then the contingent, so you're right, what if you and your spouse are traveling and you die at the same time and now you need a contingent? The contingent beneficiary should be a child or whoever you want it to be. But list that contingent person so you don't have it blank. If it's blank, it's going to go to the estate. if it goes to the estate as a default, it could come out over 5 years depending on your age when you die. So not always the best to do just on its own. Now, when you say is one better than another, there is a sense that when it goes to a kid, they will have to take it out over 10 years. That's the new distribution age, the new distribution rules for a child, and that could cause a higher income tax for that child to be paid. So hopefully that helps.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated. Elder life planning can be overwhelming, so make sure you're prepared, or you could make costly mistakes that affect your overall plan. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit your family by calling 866-848-5699 right now. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
If you happen to be at the Encore Boston Harbor last night, you may have seen someone attempting to run off with $13,000 worth of chips. Unfortunately for Danny Ocean, he was apprehended shortly after exiting the casino and most likely won't be allowed back there at any point in the future.
He got caught? You don't say.
I guess when you just grab 13 orange chips out of the dealer tray and try to run with it.
Was that wrong?
You're probably not going to make it very far. It's just not a great approach. We're going to take a quick break. Hour 2 of the Financial Exchange. Still to come here.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
If you're getting close to retirement, you've likely thought about how you'll spend all of your free time. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and with no more 40-hour work weeks or hour-long commutes on your agenda, you might find yourself on the links in Florida or traveling the world with your spouse and family. The financial pieces of the retirement puzzle are important. Having a specific plan about how you want to live day-to-day in your post-professional life is just as important, and our new guide called A Day in the Life of a Retiree may help. You can get it today by calling 800-393-4001. In the guide, we're going to discuss how to connect your financial needs in retirement to where and how you'll be living. Call us again at 800-393-4001 and get your free copy today. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org, CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here, and the markets continue to rally after a challenging few weeks culminating in Monday's sell-off, but the Dow Jones Industrial Average is now up 447 points today, about 1.1%. The S&P 500 is up 83 points, about 1.6%, and the NASDAQ up 315 points, or about 2% today. So all three major U.S. indices are in the process of rallying right now. If you take a look at the S&P 500 at the moment, it sits right now at 5322, which is about 6.2% off its all-time high. So if you're wondering, how far have things fallen? About 6% at this point from the peak. It's not to say that things won't get worse. None of us know what's going to happen tomorrow, the next week, or the next month. But where we stand right now, didn't even get to a 10% correction in markets. We stopped just shy of that. I think about 9.6, 9.7% intraday on Monday, and now off a little bit more than 6% currently, with the S&P 500 being back right now to where it was in early June. I just like to say that to contextualize where we are. If you were looking at your portfolio in June and saying, gee, I'm pretty happy with how this year's gone so far, you're right there. You've just given back, 6 weeks of gains or so. Otherwise,
we're a little spoiled. At least I am. There have been abnormally few down days, extreme down days, really over the past. 2022 was an exception, but I'll just say over the past several years, with a couple of very big exceptions, markets have. Yeah. If you look at so-called volatility, which is a fancy way of saying spread around the average, how dispersed something is, which is how people in finance think about risk. They say volatility. Sometimes, if you want a fancier term, you can say standard deviation, and you can blow somebody's socks off.
I like to tell people I take the square variance, and that's what I look at.
The square root of, yeah.
Square root, sorry. Yes, I went backwards.
You're right. Yeah, right.
You know, that really blows people's hair back when you start talking like that. It's like, oh, my
That's
goodness.
when they walk
like,
away.
This guy, I'm not hanging out with
These
him
concepts,
anymore.
by the way, are, if I can get them, anybody can get them.
They just use
not
complicated
hard.
terms. Like, the actual
I
math
think so, yeah.
is... The terms are more intimidating than the math actually is.
Totally. Most of it is like 8th grade algebra or before, to be fully honest.
Yeah.
The day-to-day stuff anyway. So it's been unusually placid lately, with a few exceptions the past few years, 2020, 2022. So you've said this a lot, Chuck. You showed some great illustrations internally this morning of the frequency of big drawdowns, and the point you tried to make, and you make it a lot, you and Mike Armstrong do on the show, is volatility is normal. It's why we get paid to hold stocks. You don't get the 11 to 12% a year that we've gotten out of big cap stocks anyway, a little more out of small over the past century now, for less risk than bonds.
If you want something with no market volatility, there's a savings account with your name on it. You know, there's an investment choice for everyone depending on your risk tolerance. But it's something where when you're buying stocks, you are buying volatility. That's like it is a primary component of what you are buying.
That's right.
So you just have to expect that stuff like this, it's going to happen from time to time.
And a good rule of thumb is when somebody promises you what seems like a pretty high rate of return, even a bank, you got to ask, how is it that you're able to generate that? What risks am I getting paid for? So when a bank offers a high-yield savings account, it's worth backing up and saying, geez, I'm getting 2% more at the co-op than I am at Citizens or wherever. What is backing that deposit? Do you have a riskier book of business than another bank does? You can't untangle risk and return. They're inherently intertwined.
Risk, another great quote. I don't know who said it originally, but I won't take credit for it. Risk is neither created or destroyed. It's just transformed into something else. It just ends up somewhere else in terms of what type of risk you're ultimately taking on. Taking a look at other parts of the market, the U.S. 10-year Treasury up 7 basis points to 3.96%. We've got oil today up $2.10 a barrel to $75.30. AAA national average for gas prices continuing to slide down another 0.3 cents to $3.45 and 9/10 right now. And we've got gold today up $8 an ounce to $24.39 and 60 cents. Mark, there's a piece in the New York Times today that on one level the headline is, very factual. On the other, it's, somewhat dehumanizing. It kind of reminds me, well, I'll talk about this in a little bit, but the headline is, to avoid recession, consumer spending is key. And the piece itself, is really talking about, hey, we're a consumer spending economy, a consumer-based economy, and as, households spend, that tends to drive, the vast majority of growth in the United States. It can be in the form of borrowing. It can be in the form of spending income, but it's generally, household spending is a big component of spending.
Demand.
And it talks about, look, if you start to see that weaken further, that could be something that triggers a recession, with the implication being, hey, spend money if you want to avoid recession, which I always hate because it's just one of the most dehumanizing things out there. Like, I don't exist to prevent a recession in the United States. I still remember after 9/11.
Yeah, I was just going to bring this up. Go.
One of the most infuriating things I've ever seen, and I was like 15 years old at the time, and I'm like, oh my goodness, this is wrong. George W. Bush comes out, and they're talking about like, hey, what can we do? Like everyone's all together at this point for like the only time since like World War II, basically. Everyone's like, hey, we all got to fix this. And someone interviews me and is like, hey, what should we do to like get out of this? And he's like, go out and spend some money. Like, that's the best thing you can do. I'm like, are you kidding me? Like, that's the advice at a time like this. And this headline just comes off kind of the same way, very subtly, like, hey, spend money if you want to save the economy. Well, no, that's not why I exist as a person, is to save the economy. Sorry.
Yeah, I get it. That's what his economist, his Council of Economic Advisors, was telling him at the time. They were cutting taxes at the time. That was part of his campaign pledge, but it turned out to be really well timed.
Yes.
Not just because 9/11, but because the economy was slowing, and we had a recession in 2001. It was shallow, but we had one, and it was underway before 9/11. It was over almost by the time 9/11
Sure,
happened. Anyway, so yeah, that's all policy is predicated on that. But to say it in such crass terms rubbed a lot of people at the time the wrong way. But in fact, as you point out, in an accounting sense, the way we measure economic growth, which is gross domestic product or GDP, is 70% consumption, demand, spending. So it's unavoidable. But at the same time, looking back, and I'll show this slide internally tomorrow morning, Chuck, and obviously I can't share it with you, but we'll look at it here at Armstrong Advisory Group in the morning. In most recessions, spending actually does not go down, interestingly, into negative territory. Most recessions are inventory or investment driven. That's where the biggest drops occur and what pulls GDP into negative or recessionary territory. So yeah, spending, if you do enough of it, can pull you out or mitigate the brunt of it. But there are other components to GDP, and some of those components are, of course, spending driven. So this is all ultimately, at the end of the day, one big pot of money, if you like. But in recessions, it's often inventories and investment, including housing, that drag GDP down.
Let's take a quick break here. When we return, we have trivia, and then Bill Dudley, who used to head up the Federal Reserve Bank of New York, wrote an op-ed in Bloomberg about whether or not the U.S. is in recession, and we'll discuss that when we return.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free, because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood void where prohibited, dine in only. The 1980s began and ended with environmental disasters impacting the U.S. In May of 1980, Mount St. Helens erupted, killing 57 people in the Pacific Northwest. In March of 1989, an oil tanker struck a reef off the coast of Alaska, spilling 10 million gallons of crude oil into the sea. Trivia question today. What was the name of the oil tanker that crashed off the coast of Alaska in 1989? Once again, what was the name of the oil tanker that crashed off the coast of Alaska in 1989? Be the 9th person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 9th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Bill Dudley ran the New York branch of the Federal Reserve for about 10 years, finishing up in 2018. A couple weeks ago, he published an op-ed that we covered where he said, hey, I think it's time to start cutting interest rates. And I noted that it was notable that someone like him was saying that because he's a pretty prominent voice in monetary policy circles. And today he's got another op-ed in Bloomberg, and it talks about how, hey, as we go over the next couple of months, we're not really going to know whether or not we're in recession or not in real time. Again, the NBER doesn't declare it as it's happening. It's often looking backwards. Not often. It's always looking backwards at the data that they do. And so he maintains, look, we've got this risk here. The inflation picture is, better than it was before, but the risk that we have is unemployment, when it starts to rise, tends to end up rising very quickly, and so you've got to nip it in the bud before it becomes a real problem. Your thoughts, Marc?
Yeah, his rationale there is that recessions can sometimes be shallow and fast. We were talking off air about 2001, even though it took capital markets a long time to recover and unemployment remained high. It was a relatively short recession, happened over a couple quarters, and the negative GDP growth quarters, though that is not the trigger for the definition of a recession, they were actually apart from one another. 1990, another example, I think it was July to March. So a few quarters, but pretty shallow, though it took unemployment a long time to get low again. So the scars were severe. These guys are desperate to, I say guys, I mean guys and women, the Federal Open Market Committee and people like Dudley who chirp from the, and I don't mean that in a demeaning way, he's preeminent. He's a giant. But people who chirp, for lack of a better way to put it, from the sidelines, they desperately want to avoid recessions because they've had a few in their lifetime that have left behind wreckage that took years to clean up. It's not clear we're in one. It never is, as you point out. Some leading indicators have perked up over the past few months. Some are problematic, like some labor market indicators that we talked about last week. He seems to think that the weight of the evidence, the balance of the evidence, points toward a slowdown or worse. And his point is that you can't control slowdowns. You don't want them to snowball into recession, so the Fed ought to act now. Anything they do today won't affect the real economy for months, maybe several quarters. So get started today, guys. That's how I read it.
The other thing that is interesting, just when you talk about where we are right now, the idea of the soft landing, and we've talked about, kind of how we would define it, on the show. I think we said we don't want to see, unemployment or the inflation rate get back above 4.5% this year. That's kind of how we would define it. But the actual landing part of the soft landing is going to be characterized ultimately by a period of time where you're not sure if you are going into recession or not because you're landing. A no landing like what we went through last year, that was not the soft landing. You never actually saw the economy land. It never got to the point where it had slowed down enough to conclusively be done with inflation. We were saying that for quite a while. So there are going to be questions if you actually, kind of go through a soft landing period. Asking the question of, hey, are we in recession or not, is going to be a feature of that time period, in my opinion, as well, because that's the only way that you actually get to a real landing in the economy is even, asking those questions about, hey, are we heading to recession or not? And we haven't really asked those seriously, at least on this show, in the last couple of years.
GDP's pretty, a lot of economic series measures are very persistent. So slowdowns tend to be followed by further deceleration, and the opposite is also true. You can't just put the brakes on and then take your foot off the brakes. There is no throttle. Well, there is. It's like monetary policy, but it's as if every time you put your foot on the gas, you don't know exactly how much fuel you're putting into the chamber. So it's a really unreliable throttle. Government can't fine tune, and the Fed, I'll include in government, can't fine tune the economy. So once you start slowing, you might not be able to stop it. Once you start stimulating it, it might get out of hand and run hot too. This is the challenge for policymakers.
Along these lines, there's a piece in the Wall Street Journal. It's titled, "Prepare for Your Next Raise to Be Smaller Than You Hoped."
Okay.
And this is the exact headline that the Fed wants to be seeing in terms of, hey, how do we stamp out inflation? On the demand side, it's through stuff like this.
Yeah, very well put. They need to see they want to see wage growth. As cruel as it sounds, they need to see real wage growth slow down to reduce demand, reduce price pressures, virtuous circle.
They need to see nominal wage growth slow down, not real.
You could say have real wage growth could slow.
Real wage growth is great because it means that you're growing spending power without necessarily.
Well, what if real? Well, okay, yeah.
Real wage growth is, I don't think, is inherently good or bad.
Well, maybe you're thinking maybe you're thinking like unit labor costs, which are productivity adjusted. Like that would be,
So let's say let's look at real wage growth just as an example. Let's say that wages go up 2% and inflation's 0. That would not be a bad scenario where real wages are growing.
In that example, no. But what if that was in excess of the economy's growth potential? I guess we should just continue. Yeah, real nominal. They need to see wage growth slow.
They want to see. Yeah, they want to see wage growth slow.
I don't mean to nitpick. Yeah,
tomato.
It kind of is. So yeah, they're happy with this phenomenon.
And this is something where when we talk about the tools that the Fed has to deal with inflation, unfortunately, they are blunt and typically induce a recession or get pretty close to it in order to slow the economy. It's not something...
That's how it works, yeah.
That's kind of the nature of the beast. They don't have anything that can specifically target, and you wouldn't want them to be like micro-targeting sectors of the economy or this and that, because then you get into, central planning, which doesn't really work for anyone.
As we all know, some treatments for bad diseases make you sick. They have terrible after effects. I don't want to cite a specific example because some of you out there are dealing with this, but we all know what I mean by this.
Sure.
This is the medicine you take for inflation is unpleasant and has bad side effects. The question is getting the right dosage.
So that's where we stand at the moment. Again, the economy is slowing by, a number of different data points that we look at. It still is unclear whether a recession is going to happen or not, but it's a higher probability now than I've seen in the last couple of years.
Yeah, I wish people would let up a little bit because of the self-fulfilling nature of the doomsday prophecy.
Totally.
You get people worried. The more you say recession, the more it's on all of our minds, the more we curtail spending. We may, as a consequence, reduce demand too much, getting back to the balance the Fed is trying to strike, and talk of recession can become self-fulfilling.
Should we talk about an expansion then instead? Actually, if you do want one bright sign, the Fed released their survey of loan officers. The Fed goes out and they survey a bunch of banking loan officers 4 times a year every quarter. And their most recent one for July just came out earlier this week. It kind of got lost in the shuffle on Monday. It showed some meaningful improvement in banks reporting better growth in loan requests from businesses and companies. Quick break. When we come back, we have the trivia answer after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Celebrate National Farmers Market Week, August 4th through August 10th. This is the perfect time to visit your local farmers market and indulge in the peak of summer's bounty. From juicy tomatoes and sweet corn to fresh berries and more, your favorite seasonal produce awaits. Support local farmers and enjoy the freshest ingredients. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled A Day in the Life of a Retiree. The big focus of this guide is about figuring out what you actually want to do with your time in retirement, not just the financial piece, but how are you going to spend your days? How does someone go about figuring that out, Mike, or starting to figure it out?
Yeah, Chuck, I love this piece because it is a lot different than our normal course of what we put together from the Armstrong Advisory Group. And what I tell people frequently, one, I'm not going to tell you how to spend your retirement. I have no idea. But the most successful retirees, and by successful, I mean the most content in retirement, who are not stressed about money, are those who have really thought through a coherent plan of not just what I don't want to do in retirement, i.e. work, but what I want to accomplish and do when I'm done working.
It seems to me that it really has to be something where you say, I'm retiring to do this, not retiring from doing that more than anything else.
And often that's the focus because, look, for a lot of us, work is extremely stressful. We've been supporting families for decades, and the allure of not having to do that, not having to pull in that paycheck anymore is really tempting. But I'm here to say that I've looked at a lot of this from a lot of different people in all sorts of different industries, and the most successful ones are the ones that are retiring because they're passionate about something that they want to do that they finally have time for.
Our guide is titled A Day in the Life of a Retiree, and you can request it by calling 800-393-4001. Again, the guide is A Day in the Life of a Retiree, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Trivia question today was, what was the name of the oil tanker that crashed off the coast of Alaska in 1989? Well, that would be Exxon Valdez. On March 24th, 1989, Exxon Valdez struck a reef while navigating through the Gulf of Alaska. The Exxon Valdez spill is the second largest in U.S. waters after the 2010 Deepwater Horizon oil spill in terms of volume of oil released. Winner today of the Financial Exchange Show t-shirt was David from Manchester, New Hampshire, and David's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine-in only.
Marc, let's talk a little bit about some earnings that we have received. First, let's talk a little bit about Disney. They reported earnings before the open today, and they posted earnings of $139 a share above estimates. Revenue came in a touch above estimates as well. They guided a little bit higher for the future in terms of growth rate and things like that, but Disney stock down a couple percent today. And this is kind of a common theme that we've seen over the course of this quarter, which is, hey, even if you're beating on earnings, unless you're doing it by knockout margins, you're not really doing enough to keep your stock price moving forward right now.
Well, Parks, and this is from the Financial Times, not off the top of my head, Business Parks unit contributed 70% of operating profit, which is one measure of profitability.
And they did warn that would be slowing down.
So yeah, that was this. This is my point. I mean, streaming the operating margin on streaming was like less than 0.1%. Overall, it's like 13. And this again, just to
they're celebrating that they finally got the profitability on streaming.
Overall, it's like 13%. And to put that in perspective, Apple's is like 30, Microsoft's is like 45. Again, a measure of profitability of what after paying normal operating expenses, which is most stuff. How much of your revenue is profit after paying normal ongoing expenses. So, yeah, not exactly impressive, I guess.
No, it's, again, the company's fine. It's not really indicating that it's going anywhere good or bad. It's just kind of, we're here. You know, we're doing all right, but there's not really anything new that's happening.
You could put this, I guess, in the slowdown column, though, evidence of a slowdown.
I think so, yeah.
We're getting indications, everybody from McDonald's to other retailers that you guys covered last week, other consumer-oriented companies, evidence pointing toward cautious statements made during these earnings calls.
And a trip to, a Disney park is absolutely something that falls into the discretionary category. I mean, you talk about, I'm not even sure. I'm pulling it up right now just because I'm curious. What do you think it costs to do a day at Disney World right now?
For like a family of 4?
Just a single, like one ticket. Like
$125.
You got $125 in the pool?
Yeah.
What do you think?
I might say closer to 2, but I have no reference point.
All right, let's see. I'm just pulling it up right now because I got to go through.
More reasonable.
Let's see. And we're doing single day ticket?
Yeah, I think that's fair.
let's see. It looks like they start at $109 a day.
Okay.
But I'm going to see if that's like the week of July 31st in Florida or something like that. Because obviously this can... Wow, you've really got to click like a million different things. Yeah, so if you want to go on a Wednesday in August, it's $109 a ticket. Let's say that you want to go when it gets a little bit cooler, even just, September. Saturday in September, you're up to $145. Saturday in October, you're up to $155.
Give me the February one. I mean, that's when everybody goes to Disney. Like February, March, somewhere in that range.
Not as high as you would think. I
No?
mean, it is, but it's not. It's $169.
Okay.
It says $169 plus, though, so let me click on it. Okay, hang on. Fake news.
Oh, no.
That's if you want to go to Animal Kingdom. If you want to go to Magic Kingdom, then it is $189 for a one-day ticket.
All right, so Marc was closer.
Pure luck.
But again, that's for one day. If you stretch it out to 4, let's say you're doing, you need 4 days of Goofy because that's kind of your thing, then you are...
I need to see Goofy all 4 days. Just Goofy.
I need Goofy. Then you are looking at... How do I even do this?
You want to know the cost of going to Disney? No, just come on in. You don't need to know the cost. Just come on down.
Okay, I guess when you buy a multi-day ticket, it doesn't matter which park you go to. They're all just the same cost. And that becomes $158 a ticket. So you get an $11 a day discount by buying a 4-day ticket.
Okay.
You're not... Again, discretionary purchase. Like, these things are not cheap is the point I'm making.
Something that was crying out for dynamic pricing, it would be that. Because you don't know what... Or do they adjust prices on the fly? Maybe they are doing it. Excuse me. Like, on a rainy day,
I think
crowds are at 50%, and...
I think that the way that they do that might be through, like, their Speed Pass things or Fast Pass or Genie and all that stuff, which you pay to get on rides more quickly if you need to.
Okay.
And so I'd
so
imagine
there is
they
an
get more
element of
uptick
dynamic
on that
pricing in the experience. Okay.
And look, a lot of people listening will be like $160 a day for Disney, like that's crazy. And my answer would be, yeah, it probably is, but we all do kind of dumb, crazy things that cost way more money than, we would normally say. Like, some of us spend money on, I don't know, you're a big sports fan, and I went to this game, and okay, like that was way more than you thought. Or, hey, I'm really into golfing, and look at this course I played. Or, hey, I'm really into hunting, and I spent X number of dollars trying to get a bear tag for this fall, and because it was a lottery in this. Like, we all spend money on
a bear tag that entitles you to hunt bear.
Yes.
Huh.
Actually, moose tag is the one that's usually a lottery up in Maine, I think. Bears, I don't think you have to go through a lottery in a lot of cases. I think you can basically get what you want. But in, I believe it's Maine and maybe New Hampshire, they have a lottery system in parts of the states for moose, where basically you put in a ticket and say, okay, I'm hoping I'm going to get this. And then if you do, I can't remember if it's it might be like 3 days, it might be a week. I can't remember just because I haven't looked at it in a while. But if you get it, great. If not, you didn't. So that's the deal.
Summer in New England is spectacular, but winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you'll need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean Paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Let's talk about some other earnings here. CVS, which is... again, New England-based company that just has been really, really struggling for quite some time now. They had a brief reprieve in, kind of late 2020 through early 22, largely on the back of, a lot of visits coming through because of COVID-19 shots and boosters and things like that. But otherwise, 10 years, the total return on CVS stock dating back 10 years right now, again, this is total return including dividends, is negative 1.53%, which is not good over a 10-year period in which the S&P 500 has seen a total return of 228.1%. So there's a problem here, and no matter what CVS has tried to do, whether it was buying Aetna or changing their approach to trying to get more online focused, they're just not executing very well right now. And part of the problem that's developed as a result of this, they're also alienating a lot of the pharmacists that work there through longer work schedules, making them do more stuff, putting them into roles where they're giving vaccinations and things like that more often, and taking their time away from fulfilling prescriptions and things like that. It really is a challenging time at the company, I think.
Lukewarm revenue growth, growing costs. If you use that operating profit margin, which is just operating income divided by revenue, it's going in the wrong direction, has been for several years. This is not a deep insight. Obviously, I'm not an analyst covering this sector, but if you look at basic measures of profitability and efficiency, everything seems to be moving in the wrong direction. And this is true of others too, like Walgreens.
It really makes you wonder kind of what the long-term future is for pharmacies in the United States. Not that CVS is in danger of going out of business or anything like that, but you've got so much of the pharmacy market that's now consolidated just between CVS and Walgreens. If one of them decides, hey, we're going to start closing lots of locations in order to stay afloat, hey, what does that mean for the availability of pharmacies in those communities, just because there aren't really that many local options that can take over at this point?
Pardon my ignorance, but you know individual companies much better than I do. What business lines in a pharmacy are typically highest margin, whatever your favorite profitability metric is? Is it the pharmacy itself?
I don't believe so.
Okay, it's not.
I believe it's typically
like
anything, front of store, the retail stuff, snacks,
okay,
soda, stuff like that. But I honestly, I haven't looked closely.
Because what if how might it be different? How might this industry that we all depend on, we're all in CVS or Walgreens like once a week.
Yeah.
How might it look different in 5 years or 10 years or whenever this reckoning, whenever the post-reckoning period is?
Don't know. I mean, it might be that the move ends up being more towards, mail order pharmacies becoming, more and more the norm. I know a lot of folks already use them, in a lot of cases predominantly might be using them, but maybe that's where we end up heading with a lot of this. But I think that's a major loss for if you want to, be able to talk to the pharmacist and sit in there with them and say, hey, how is this going to work with something else that I'm taking? Those are things that pharmacists are trained to answer right now. If you're just putting an order in on a computer, you lose a little bit of that.
Yeah, okay.
Let's take a quick break here. When we come back, it's time for Stack Roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
If you're getting close to retirement, you've likely thought about how you'll spend all of your free time. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and with no more 40-hour work weeks or hour-long commutes on your agenda, you might find yourself on the links in Florida or traveling the world with your spouse and family. The financial pieces of the retirement puzzle are important. Having a specific plan about how you want to live day-to-day in your post-professional life is just as important, and our new guide called A Day in the Life of a Retiree may help. You can get it today by calling 800-393-4001. In the guide, we're going to discuss how to connect your financial needs in retirement to where and how you'll be living. Call us again at 800-393-4001 and get your free copy today. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free, because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com. Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts. We can't wait to take part in this year's DAV 5K, set for Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Mark, what do you have for Stack Roulette for me?
Interesting article in Bloomberg that sums up a Federal Reserve Bank of New York study on where the job openings are. The big picture, and I'll just read it. A growing portion of job openings are being posted in smaller, not bigger metro areas, and it's a pretty dramatic shift. In 2017, for example, the sample was actually 2017 to 2019, 46%, so nearly half of openings were in large metro areas. I don't have the definition that they use here on the tip of my tongue, but you can use your imagination and associate it with places like Boston, New York, and Dallas, et cetera, I guess. That number is down to about 38% today. It doesn't sound like a lot, but several percentage points of several million openings is a lot. So my takeaway from this for the labor market and even the fight against inflation, which has come down a lot but is not yet at the Fed's target, is it allows us to maintain a lower unemployment rate without pushing up inflation. If people have more choices, if they're able to work at the job of their choice in a cheaper area, it lowers the so-called natural rate of unemployment. Anything that makes the labor market more flexible or attractive to either side of the labor bargain, in a way, in the long run, makes the Fed's job easier, in addition to giving people more choices and allowing them to live a more desirable from their point of view lifestyle. So I take this as good news, as anybody probably reading the article would.
I want to talk a little bit more about the situation with Delta Airlines following their disruptions a couple weeks ago after the CrowdStrike bug wreaked havoc with computer systems worldwide. Microsoft yesterday joining the fray by basically saying, hey, we offered to help Delta an awful lot during that time, and they repeatedly rebuffed us and said, no, we're not interested. And Microsoft also said, quote, our preliminary review suggests that Delta, unlike its competitors, apparently has not modernized its IT infrastructure, either for the benefit of its customers or for its pilots and flight teams. So Microsoft pretty much saying two things. Number one, hey, we tried to help you while this was going on and you weren't interested. And B, hey, why didn't you pay for those upgrades before? You're 3 cycles behind Delta. What's going on? Which I do find that to be kind of humorous because, again, you kind of interpret this and you're reading. They're saying, okay, they didn't modernize their IT infrastructure. Who would handle that? It's Microsoft. Microsoft is pretty much saying you didn't pay us for the upgrades that we said you needed.
Do you normally chastise your customers publicly like that? Couldn't both parties resolve this behind the scenes? Why air your dirty laundry? And Delta is a customer of Microsoft.
Delta started this.
I know, but still, they're the customer. Don't you have to sort of suck it up and take it when the customer badmouths you?
Not when you're as big as Microsoft.
Oh, okay.
I mean,
that's telling. That's indicative of how much market power they have.
Well, and also, here's the thing. Microsoft knows how much it'll cost Delta to switch. What are you going to do? You're going to change your IT infra? Okay, where are the margins going to come from for an airline
Jeez, if
to
they
do
have
that
much power, maybe there is something to these antitrust rants against Microsoft.
As someone who's been through a few different system overhauls and switches and things like that, at a much smaller company than Delta, it's not something I would wish on my worst enemy. It's miserable. It's absolutely miserable to go through, and Microsoft knows that. Like they know that Delta's not going to switch.
These people are your partners, though. You dress them down publicly. How do you then? The whole world's becoming like Trumpified, where everybody airs their dirty laundry, and you're a dummy, and you're a low IQ boob, and it was your fault, not mine. Are we getting more coarse?
Thank you, sir. May I have another?
Yeah, are we getting more coarse? I mean, are you supposed to sell these things behind the? Is it social media? Is it?
It's look.
I'm just a little surprised that somebody would deride a customer like that. But maybe I'm naive. I'm old-fashioned.
I think part of it is that Delta has pretty much said we're going to sue you for damages.
Okay.
And when they say that publicly, what do you do? I mean, look, you could just be quiet and deal with it quietly, which again, there's nothing.
Okay, maybe there is something to managing perception here.
When Delta says publicly, and their CEO says, "Hey, we think you are responsible, and we're going to seek damages where we need to."
You just say we're not, and we're going to vigorously defend our position. Period. It's just the public spat nature is weird to me.
Look,
what do I know?
I agree. It's not something that's constructive.
That's sort of what I mean. Yeah, maybe that's just where we are now.
I mean, I don't know. I mean, this is stuff. I don't think it's unique to right now necessarily. I mean, what was it? You had this stuff back in what was it? The 1800s. Charles Sumner being caned and in Congress and stuff like that. I mean,
okay. Yeah, different
technology, but.
I was going to say, different issue. People felt very strongly about slavery one way or the other.
Yes, but I'm just saying, we've always been, more aggressive than we'd like to be as humans.
But a civil war followed that. That's not a good example.
Let's take a quick break for the rest of the day. We'll see you tomorrow on the Financial Exchange.
This Veterans Day weekend,